What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're going to be talking about Lululemon, ticker LULU. Now, one little programming note. You guys, tomorrow, today's Tuesday already, right? Wow. Tomorrow, I am going to fly back to Chicago in the morning, and then I'll be at my parents' place in the burbs for Wednesday. I'm going to do some stuff on Wednesday, but I won't be able to do any live trader stuff Wednesday. And then Thursday and Friday, taking the day off. So I'll have a nice little break, which is good. I don't really take days off. Zach's is gracious enough to give me like 15 days a year of vacation time, and I never take it. I don't know why. I don't know. I even on my days off, I'm following the stock market, so I just find myself constantly watching it. You know what they say: do what you love, and you never work a day in your life. I totally believe that, because I just don't. It's like I have to be forced to take days off. So, but I'm gonna do it because the girlfriend's coming up to Chicago with me, so might as well show her around a little bit. So nothing Thursday, nothing Friday, nothing Monday, nothing Tuesday, probably nothing Tuesday or Wednesday actually of next week. It's almost like a whole week off of nothing. Because when I'm in the studio, when I'm back in Chicago, I have like 4 videos that I have to do on Monday, and then another 3 on Tuesday. So I'll be around, guys. I'll be in the chat for sure, checking things out. Because like I said, guys, even when I have a day off, I don't leave this stuff, right? It's always with me, always. I'm not gonna pull up my little E-Trade thing today, but I will just tell you where I'm at. So as far as UVXY goes, I avoided it this morning. A one-day does not a spike make in volatility. That's right, guys. Free stock charts is fired today. I didn't want to mess around with this. I wanted to show you. Now, these are all going to be delayed, okay? All these quotes are delayed. I don't really care. Most of you guys look at this later anyway, and we could always pull up the real time, right? We know what the number is. But just looking back here on the VIX specifically, remember I was talking about how strange it was to get like the double spike? Well, we almost got a triple spike because today we got up over 13.5, and now the VIX has settled down. I think we're under 12 now, so we're kind of like here. So what I did was I went ahead and, yeah, you're absolutely right, Jeff. You do get what you pay for. But even when I don't want to get distracted on this. I have a huge diatribe on actual paying for quotes and then being terrible anyway. Anyway, so looking at the news this morning, I was there for the spike up in volatility. UVXY got up to about 35, and I did not want to get in front of it. The Donald's in Texas right now, and just got off the plane, I don't know, maybe an hour or two ago. I'm expecting him to say something incendiary. So I actually went long the VIX. I bought, well, you can't go long the VIX, right? I bought a VIX call going out to next Wednesday. So I don't think this thing is over yet, so I wasn't comfortable jumping in front of UVXY this morning. I see the bounce here, and I would love to believe it, but I don't. So I'm buying I bought a little bit of protection. So I've got 3 of the 1250 VIX calls next Wednesday expiration. And what else do I have? I still have the FXY put spread, which is underwater right now. I don't know if that's going to make it back. We'll see. That's out to September 15th. And then, of course, the USO short, which is looking spectacular so far. So that's good. Earlier this morning, I was up about 60% on that short, which is great. I think it's come down a little bit. So my long VIX, Kurt, you guys got to get. He hasn't said enough yet. Trust me, Trevor. He's going to say something about North Korea, specifically what I'm looking for. So something more about North Korea. Trust me, he's in Texas. Watch what happens. And you have the UN meeting today. So I think something's going to happen over the course of next week. Anyway, Kurt, to answer your question, actually trading the VIX itself. So this is the actual VIX, right? Also known as the spot VIX. So the way that you trade this is options on this. So they have weekly options, right? And these expire on Wednesdays. It says Wednesday, but it's like Wednesday and it's 7 a.m. I think. So really Tuesdays are the last day that you trade them. No, it's actual VIX, not VXX, but the VIX itself. So if you look it up, depending on who you got, it has a different options change for it. It's specific, and it's the SIBO VIX, okay? Different from VXX. It's not VXX. So here's how it works. This is the spot VIX. So the SIBO VIX is the spot, a.k.a. the spot, right? So the way that works is this is a calculation based on the variance of S&P 500 index options, okay? So basically how big the range is in those, this is going to spike. So as the range increases, there's uncertainty, you see spikes in the VIX. Okay, so this is the spot VIX. Then you have options, right, on this spot VIX of varying, expiration and price and type. Then you have futures also on the spot VIX, right, of where it's going to go. So then VXX is based on the futures, and then UVXY and all the other ones are also based on the futures. So this is 2 times basically that equals that, right? So it's like derivatives on derivatives on derivatives on derivatives. So what I suggest doing is you got to learn a little bit about actual VIX here, right? Because it's different. And the biggest difference is when the option expiration is. So this option expiration, basically today's the last trading day for it. And then if you had VXX, options on that expire, after Friday, right? Friday at late. So read up a little bit about it. The SIBO VIX. Okay. So anyway, so that's what I got going on. So just wanted to share with you what I have. Okay. And let's go ahead and get to Lulu. Looking first at the price consensus and EPS surprise chart like we always do. So here you can see black line corresponds to right y-axis, which is price. The little green arrows are earnings beats. The red arrows, there's a couple of them, are earnings misses. The multicolored lines represent the evolution of our Zacks consensus estimates over time and correspond with this left y-axis. So it's been a little bit choppy here for Lululemon. Tough 2013 into 2014. Earnings troughed. You started to see some growth there, although higher kind of promises and then selling off, right? So over promise, under deliver. And you see how these 2018 expectations have continued to drop, right? 2017 and 2018 continuing to drop, but this sort of growth remains, right? So the hope of growth is still there. I do want you to take note of the choppy behavior, though, of the stock price. Very hard to find a trend here in shares of Lululemon. Not just there, but also tough to find a bullish trend in this EPS Now, recently, just about the last 3 months, 6 months, have seen a little bit of an uptick in EPS, so that EPS estimates rather. So that's a good thing. So analysts out there are thinking that there's a turnaround. So that is bullish for the stock. Overall, Zach's ranked number 3 hold right now. They're going to report after the bell on Thursday. So you've got the rest of the trading day today, all of tomorrow, and even some of Thursday, all of Thursday rather, to make your decision. And like I said, unfortunately, guys, we won't have a morning after. Although like I said, I'll check in the chat and talk to you guys real quick for a little bit on Friday. Depends on what I got going on. Depends on how much fun Thursday night is. So here's the revenue numbers: 10% for the current quarter, 10% for next quarter. Current year looks like 9.12. Next year aims to get a little bit better, 10.16. So there's that. But translating over to EPS, we actually have a contraction in EPS for the current quarter. Next quarter is supposed to be 11.5%. Current year 9.72. Next year looks like 13.37. So the revenue numbers look a lot better than the EPS numbers because of this quarter. Now, let's see what the analysts have been saying about it. Over the last month, you do have one analyst that has increased their earnings estimate for the current quarter. You got somebody out on a limb just in the last week increasing their next quarter and current year number. And if you look over the last 60 days, a little bit more bullish behavior. And we saw that in the price consensus and EPS surprise chart. So that was evident there. Let's look at the overall hit to our consensus estimate. We see down from 41 cents to 35. And then pretty much flat next quarter. Next quarter, next quarter, 52 cents. Current year number from 233 to 235. Next year from 261 to 266. Now, if you look at the surprise, you'll see a little bit of a disappointment Q2, and then everything else solid. All right. Bust out the G14 classified stuff here. I was doing a lot of research here on Lululemon. Analysts are pretty bullish. The two big houses that follow these guys, both of them. One of them had I think it was Oppenheimer had it on its like best ideas list, and then William Blair was very bullish on it too. Which I don't think we need to argue. The bullish nature. What's been happening is, you guys remember the Best Buy feed. I was bullish on the prospects of Best Buy beating earnings, but I thought it was going to go down. I think the same sort of thing is going to happen here with Lulu. Where is it going to be enough? Here's the wild card I have with Lululemon, and a little bit of a head scratcher for me personally. So Lulu, in this, little niche that they have, was starting to butt heads a little bit with the Under Armours and the Nikes of the world, which I believe translates to the Finish Lines and the Foot Lockers of the world, and those two just got destroyed. So what does that say for Lulu? Is this something where they're going to step in and benefit and say, oh yeah, well, our stores are going to do better because now women are going to come over here, they're not going to go over there? Or is that not the case? Will the market care if it is the case? How has the market been rewarding some of these retailers? And they haven't. Definitely didn't reward Best Buy. Now, the one thing I saw about Best Buy that was a huge negative was margin contraction. Lulu is still expecting to expand margins this quarter. So that's kind of a feather in the cap for them. Really just further complicating our process here, but that's all right. Okay. Stocks at 58.88. Let's just look at 59. See what the market's pricing in here. Pretty wide on that 59 call spread. Very wide. 288 by 385. Very wide. We're just going to call that 333. No, not 333. 336. Now, let's look at the money put. 266 by 315. We're going to call that 290. 626 is what they're looking for out of 59. So they're looking for 10.6%. That's a pretty sizable move. Again, same story with Best Buy, right? These guys, they were pricing in a pretty big move. Best Buy seems to nearly have done that, right? Where's Best Buy? Yeah, Best Buy moved 12%. I think they were looking at also a 10% thing. So, all right, let's look at the consolidated surprise sheet here for Lululemon. See how it's done in the past, and indeed we've got a 12%, 20, 20, 10, 6, 10. Big mover. It has been a big mover on earnings for the last several quarters. Let's go before then and see what happened. More of the same. 11, 15, 8, 13, 17. So lots and lots of movement out of Lululemon following their earnings reports. So that's pretty good. So here's the thing, guys. I'm sure you can. You got to just dig for it. Well, you absolutely have to. I mean, if I could do it on E-Trade, you guys should be able to do it there. Try a symbol. Maybe I'll try and find the symbol for you guys. I know we keep talking about this VIX thing. It's just in the corner of my eye. Okay. Let's get to the, I want to get to the chart here real quick. They're pricing in 10%. Now, we're going to have to update it a little bit. These guys are trading at 58.83. 58.83. And we're looking for, so basically 59 and $6 on either side, right? So 53s puts you down here. And then 65 to up into here. So this is an interesting move here that they've basically gotten in a good chunk of this gap. So that's been filled pretty much. Look at how it's tracked with the 50-day. So this is now the second time it's come down to test the 50-day. But it has been supportive as opposed to the previous interaction with the 50-day where it provided a lot of upside resistance. So this was a big deal when the stock gapped up after last earnings report, found itself some support at the 50-day and continues to move higher. Now this basically hammers home a point that I've made in the past, is that when it comes to these earnings reports, you know, when you're looking for these events that are significant technically, oftentimes the earnings report is going to bring you that because you're going to have enough volume to push it through resistance levels. So that's what happened in the previous quarter. Then again, they came down and found support, have been rallying off that support ever since, but some resistance levels. That's 66 of this previous sort of peak. But I think that this had more to do with the 50-day being in the range versus 66 being any sort of magical number. And if you zoomed out here a little bit, I'm sure you could see. This is overall a pretty bearish pattern, right? High, gaps down, finds a base, right? Approaches his 50-day, gaps up, gets into this gap just by a few ticks, and then fails. Sells off, big gap down again. New lows, gap up. It's interesting that it got up to 64 and then retreated back to the 50-day ahead of the earnings report. Nice little whipsaw as you had the commodity channel index overbought, crossed down all the way to oversold. Now it's right at the 0 line. All right, so let's get back to the options chain and see what we can see. Change from a side-by-side to the stack view. Go out to the October expiration so you give yourself a chance for some post-earnings drift. Now, got a couple of ideas here, guys. So, first of which is that Lulu does benefit from the turnaround, from whatever's happening at Foot Locker and Finish Line, that Lulu somehow benefits from this. And I know that maybe that's not, the core of the business, but I think that's the most recent big event that we've had that has an impact on their business. May not be the largest impact in the world, but it is in fact an impact. So if we go out to October, let me look at this October 6th expiration real quick just to see. Back to the 10th here, or the 20th. All right, so let's just look at this. The 60-65. So this is the October 20th expiration, right? So this $60 call, yes, it's out of the money, but it's going to cost you $3.43. Simultaneously shorting the 65 call, you're going to get back 162 of that. So your net outlay is going to be 181. The difference in strike prices is $5 minus that 181. 319 you can make on 181 or 176%. And you basically just need Lulu to break out to the upside. Not in uncharted territory, nothing crazy like that. You just need a decent report and the market to behave nicely to you, okay? Now, this is all the way out to October because the thinking here is that you get that post-earnings drift eventually that sends the stock a little bit higher in the future. So this is a bull debit, pretty aggressive. Long the October 20th 60-65 call spread for 180. Was it 181? Yeah, 181 net debit. That's like 4-star risk. Okay. Only reason why I'm not calling it 5 stars a risk is it goes out to October, so there's more time. But that's a pretty good reward if you're right. Now on the flip side, on the shorts, it's still by the 60, and pretty much 55 is what they're looking at, or 53 is what you're looking at to the downside. So you could pick either of these. I typically don't stretch it all the way out. You guys know I pinch it in and do my quote-unquote halvesy all the time, right? And you could do the same thing here. But just looking at the 60-65, 60-55 rather. $60 put's going to cost you $448. Simultaneously selling the 55 put, you're going to get back $220. So $228 is going to be the net outlay. Difference in the strike price, $5. So you can make $272 on $228 or 120%, right? Now you can dress this up to make it look a little better if you want to, or better risk versus reward, or at least a better reward rather. If you inch down your put just a little bit out of the money, you're going to get a lot more bang for your buck. You're going to get $1. So you can make $1.50. You make 150% on that trade. Okay. Or, like I said, you can extend it out to the 52.50 if that's what you want to do. But just going to be more expensive. So I'm going to say bear debit here long the October 20th 60-55 put spread for 228 net debit. Okay. Now, I don't have as good as a feel for this as I had. For some reason, I just thought Best Buy was going to dump. I can't come out here and tell you that Lulu is going to dump. I think they have a decent report. I'm not sure how the market's going to react. I'm not sure. So a part of me wanted to look at a Condor going out of the money and, you know, selling the out of the money call spreads and put spreads. And you can still do that if you want. Show this all. You can go a little further. I would suggest just going a little further out, giving it like a little bit more cush, right? So in this case, you know, 65s. And only having one day on it after earnings. 65, 67. I don't know that that's good enough bang for your buck here. Because look, you're going to get 30 cents. So this means you're going to make basically 15 on 85, right? 30 on 170. I don't think the risk reward is there for the Condor. So if you don't have a real good beat on what you think the market's going to do to Lulu, just take a pass on either one of these. I think that the market has been aggressively pounding everything retail oriented. So I think the trade that pays is going to be the bear debit. And you got a lot of time with that one. You may not need to go out that far, but part of the reason I'm going out that far is that that time value is going to give me a little bit of cushion, I think, in case it's wrong. So I'm going to say the trade that pays is the bull debit. Oh, not bull debit. Not bull debit. Oh. I meant bear debit. Yes, trade that pays is bear debit. The 60-55 put spread. Okay. So where could this thing go if it really does unwind? The next level of real support, I think, is all the way down at 51. They could really take this thing out to the woodshed if they wanted to. And it would look like a pretty good continuation pattern to the downside of this. And you do have this, money flows have gone a little bit negative. But this still just seems expensive to pay, 70 cents for the 52. I think they've been overpricing these lotto tickets, man, and making it a lot worse for us. So I would just wait and fade a move the day after. That's what I would do too. Yeah, if you're gonna do a lotto, you gotta almost get out of the money with a put spread and find a way that you can get a nice little setup for yourself down out there. 55. You could do that. Use 55 as an anchor. If you went out to 55 and 50, you got $1 at risk. And if it gets down to 50, you quadruple up on your money. That's pretty good. The September 53, September 15th, 53. Let's see. Might not be bad if you want to spend $113 on it, though. I just hate spending that much on stuff out of the money like that. If you buffer that, right? You do the 53.50. At least you're going to get back some of that. So 113 and the 59, right? So we'll see. So I don't know. I don't really have an official lotto for you. I think with the VIX elevated a little bit. I know that sounds funny with the VIX at 12 saying elevated, but when it was trading at 9, right? I think as volatility has expanded a little bit, these options have gotten a little bit pricier, I've noticed, over the last week. This is probably heck, last week too, so this is probably the third or fourth stock we've looked at where it's getting a little chunky, a little bit expensive for some of these lottos, and they end up being kind of, a little bit too much. So, all right, guys. That's it, man. That's all I got for you here on this one. I think Lulu beats, everything looks good, and the stock goes down. That's what I think happens. There's no hope. I don't. That's what I think. I think they're going to dump it on earnings. Dump it into the volume, because that's what everything has been doing, pretty much. And this is in the right sector, in the right industry, where I think that's going to continue on today. All right. Now, I'm going to be in the chat, like I said, a little bit later today, maybe tomorrow in the afternoon, and then sporadically Thursday, Friday. Yeah, no GBU. Burlington advice. Maybe I'll do something quick. Maybe I can do something quick tomorrow to just check in on those. I could try to do that, Kurt. I'll try and check in and do something quick on Burlington and Ulta, or at least send an email or something. Okay, I'll follow up with something. If it's not a video, it'll be something. All right, guys. And that's it, man. That's all I got for you guys here today on Zach's Live Trader. I hope to check you guys out in the chat room, and we'll go from there, man. I'll see you guys later.